Hello everyone, welcome to our channel AlgoWise, and today we are going to discuss Q1 Financial Year 23 results of MTAR technology. So let me share my screen. So MTAR technology was established in 1970. It is in the business business of manufacturing of various machine equipments, assemblies, sub-assemblies, and spare parts for energy, nuclear, space, aerospace, defense, and other engineering industries. It has a market cap of 4519 crores. The current price is for 1469. The 52 weeks high is 2563 and 52 weeks low is 1158. The stock PY is 65.9. The return on capital employed of the company is 16% and return on equity is 12.2%. The profit variation for 3 years is 16.9%, whereas the sales growth for 3 years is 20.6%. The change in promoter holding from last quarter to this quarter of June is minus 2.78%. So if you look into the PYE median value for the last 3 years, this is 90.4%, which is the current PYE is 64%, which is lower than the median PYE value. So if you look into the sales number from June 2021, the sales has gone up from 54 crores to 91 crores. Sequentially, it has gone down from 99 to 91 crores. So if you look into the net profit number from June 2021, it has gone up from 9 crores to 16 crores. Sequentially, it is down by 4 crores from 20 to 16. So if you from comparing the overall from June 2021 to June 2022, the company has shown a good growth both in top line and bottom line. If you look into the operating margins in the last 3 quarters is more or less fixed, which means that even during the high inflation environment, when the raw material prices up, they could able to successfully transfer that to their end products, which is a positive side for the company. So if you look into the balance sheet, the reserves of the company, it's like and if you see the borrowings of the company, it has a healthy debt to equity ratio. The reserves is 489 against the borrowings of 96 crores. So one of the concern of the company is the debtor days. The debtor days is the average days which is required by the company to get the cash from their vendors or from their clients. So those typically 45 to 60 days is considered to be a good debtor days, whereas for MTR this number is 154. The shareholding pattern, like as already discussed, that the promoters holding has gone down from 50.26 to 47.47%. The FII's holding has also gone down from 6.19 to 2.3%. DII has increased their holdings from 23.46% to 27.26%. Public or the retail investors have also increased their holding from 20.1% to 22.98%. So we'll look into the other aspects of the business of the company. So company has a strong order book. If you see, it has a diversified order book in nuclear sector, space sector, defense sector, clean energy. In nuclear sector, it has an order book of 21%. In space sector, 19%. In the clean energy, 53.1%, and in defense, 5.8%. So in 31st March 2022, the order book was 648.8. The company in their conference call earlier stated that for 31st March 2023, the order book would increase from 648 crores to 1000 crores. So in June quarter, the order book is 765.6 crores. So apparently it looks that company is well on track to maintain to their target of 1000 crores by the end of this by the end of financial year 2023. So if you see, the working capital requirement has gone up from March 22, March 2021, and March 22. And in this quarter, the working capital requirement is 249 crores. So if the order book increases, the working capital requirement will also increase, but they can bring the working capital requirement marginally if they can improve on their debtor days. So why debtor days is important? Let's try to understand that with an example. So if we received the order of say 10 cars, which would have a sale value of 50 lakhs, and the cost of manufacturing of the 10 cars is 30 lakhs. So here we are seeing a profit of 20 lakhs straight away. But see, if the debtor days is 365 days, so actually these 30 lakhs you have to invest from your own pocket to manufacture. So if you have taken loan of this 30 lakhs to manufacture this one, then you're considering 10% of interest rate, and while the debtor days is 365 days, so that means in 1 year you will incur an interest of 3 lakhs. So which will actually reduce your profit from 20 lakhs to 17 lakhs. So that's why it's always important to maintain a good debtor days, which can increase your actual profit margin. So in the conference call, the company also stated this fact, and they told that they are trying to improve their debtor days. The only challenges is that the major of their customers are public sector companies. So due to government approvals and all, it's often the payment get delayed. So that's a near-term and long-term challenge for the companies like MTAR. So they are taking establishment for the new capabilities of electronic control system. The company has got the in-principle approval from the board to establish electronic manufacturing in-house. The company has started working on establishing a full-fledged EMS, which is an electronic manufacturing system facility. The key products which are under development in defense sector, the company has started working on designing of valves, which has an immense market potential in defense. In space, MTAR is in the process of developing semi-cryo engines, the next generation liquid propulsion engine that enhances the payload carrying capacity of GSLV Mark III from 4 tons to 6 tons. The first engine is expected to be rolled out by Q4 of financial year 23. Board has given in-principle approval to explore the possibility of concept design and development of small satellite launch vehicle amidst the privatization of space initiative through InSpace by Government of India. In clean energy, they are working on manufacturing bellows, ASP assemblies, ceramic assemblies, heaters. These are all import substitutes which will help improve their operating margins. Their existing customers in defense sector are DRDO, HAL, Bharat Dynamics, ADR Pune, Rafael, GE, Tata, Elbit System. In nuclear power, they have BAE, BARC, IGCAR, NPCIL, Bhavani, Nuclear Fuel Complex. In space sector, ISRO, SSC, LPSC, Vikram Sarabhai Space Center. In clean energy, Bloom Energy, Andritz, Void Hydro, HITS. In marine oil and energy, Kongsberg and Technip FMC. So if you look from financial, they have penetration in multiple sectors, and from financial year 21 to financial year 22, there have been a shift of clean energy. If you see, the clean energy has gone up from 49.8% to 62.6%. So at the expense of nuclear, which has gone down from 22.4% to 14.2%, and space, which has gone down from 23.6% to 15%. So the focus on clean energy would give them volumes going ahead, and also may improve their EBITDA or the operating margin. If you look at the geographical split, the domestic need is 45%, whereas the export is 55% in financial year 21. In financial year 22, the domestic need is 39%, and the export is 61%. So overall, the company boards well with the concept of Make in India or Atmanirbhar Bharat. It is into those sectors where the penetration is very difficult, so it would not face competitions from the other companies. These two are the positives of the companies. Also, the company has shown a healthy growth both in top line and bottom line. The key challenges would be to improve on their debtor days, because if the government payments are delayed, it can impact on their operating margins and also the EBITDA margins. So if you look into the other aspects, the overall the company looks good, but still the valuations, if you see a PY of 62 looks such expensive, even with a higher top line and bottom line growth. So to summarize, it's a good company, and it may be a long-term bet, but the investor has to do due diligence before making on an investment decision. So that's all. For more updates for other companies' result, please do subscribe to our channel. Thank you.